A very good afternoon, ladies and gentlemen. My name is Andrew MacLeod. I'm an associate partner in Aon's reward consulting practice. Welcome to this, our third webinar on gender pay reporting regulations that we're conducting in collaboration with law firm Fox Williams. We will be recording today's session and sharing the slides with you after the call. So it's been a long time coming, but the final regulations are now with us, late last week. Today we look forward to sharing these with you and obtaining your comments and questions. So quickly, just a couple of brief introductions. I'm delighted to be joined today by Jane Mann. Jane heads the employment practice at law firm Fox Williams. Jane will be chairing today's proceedings and sending across all those tricky questions you'd like further clarity on. We also have Audrey Williams on the call today. Audrey really is one of the top legal minds on equality legislation and is a partner in the HR group at Fox Williams. She has been working very closely with government, ACAS and CBI on this legislation and will be walking us through some of the finer legal points of the regs. So, as I said, this is our third webinar we have run in 2016. Now, for those of you that have been participating in the past, we will do our very best to highlight how these regulations have changed from the earlier draft iteration. Now, it's probably just worth reminding everyone why Aon and Fox Williams are collaborating. Well, firstly, as HR consultants in Aon, it is critical we are supported by a legal perspective. In comparison to the draft regulations, the final version has a number of legal items where a legal perspective is really critical. Now, secondly, we are able to provide auditing and pay analysis on what is a rather sensitive subject. And to do so under the protection of legal privilege is often a very key priority. So it's interesting, most of the research indicates that really only about 8% of companies have actually conducted this type of analysis. And it's probably fair to say many of us have avoided it in the past, often nervous about what the results may reveal. Well, now we all need to be doing it, and having a legal confidential framework will just ensure that you have time to analyse, digest and develop an action plan prior to the disclosure in April 2018. So, before I hand over to Jane, I'd just like to direct you to the questions and answers box on the webinar screen. On the right-hand side, you will see a box a little bit like this one. So please do submit your questions and we'll do our very best to answer them on the call today. I'd also just mention that we have over 400 participants registered for today's call, and if our last webinars are anything to go by, the sheer volume of questions will mean we cannot answer every one. So we would encourage you to reach out to either Jane, Audrey or myself after the call if we don't get to your specific question. So without further ado, Jane, I hand over to you, and please may I ask you to walk us through the agenda.
Thank you, Andrew. I'm Jane Mann, head of Fox Williams HR Law Group, and I will be chairing today's webinar on the recently published Gender Pay Gap Information Regulations. Thank you very much for joining us today. For the first time, employers will be required to publish on an annual basis the percentage difference between the amount paid to men and women in their organisation. The underlying policy objective appears to be to drive greater equality in the workplace, including providing more equal opportunities for men and women to progress their careers. The purpose of today's webinar is to give you an overview of the practical steps employers will need to take in 2017 to comply with the regulations. You will see on your screen at the moment the agenda for today's call. You will see that we will first be discussing which employers have to comply with the regulations. Then we will consider whose pay has to be included in the calculations, essentially UK employees and some others. Next, we'll be providing an overview of what you have to report, and then the really tricky points. They are the definitions of pay and bonus and the calculation of working hours and hourly pay. Audrey will be tackling some of those. Andrew will take us through some calculations, and you will be able to work through these afterwards, since we'll be sending the slides out to you. Then we will consider who has to sign off on the statement, where it has to be published, and the narrative and action plan that might accompany the statement. As Andrew has mentioned, we will be answering some questions at the end of the webinar, so do please send them in during the session. And now over to Audrey to look at the scope of the regulations.
Thank you, Jane. So actually, we've already had one question about the employees and employers in scope, and is it group or legal entity? So let's come straight to that question first of all. Well, we have the regulations that have been laid. They will come into force on the 6th of April of next year, and these are regulations that apply to large employers in the private sector and in the third sector, and it's very specifically defined. A large employer is an organisation by reference to the legal entity, not by the group, but each legal entity that has 250 or more relevant employees as at the snapshot date. Now, this term snapshot date is a new definition contained in the regulations. It is the 5th of April. So for every year in which you have 250 or more employees in a legal entity, you are going to have to report by the following 4th of April. And we'll talk about the timelines in a little bit more detail. Just a couple of points to bear in mind. You count each part-time employee and each person who's working perhaps in a job share as one employee. There's no concept of full-time equivalent when you are totalling up for 250. And the public sector are not covered by these regulations, but will have other provisions that will apply to them. And for these purposes, public sector, i.e. those that fall outside of these specific regulations, are those listed in Schedule 19 of the Equality Act. That covers NHS bodies, health bodies, education organisations, broadcasters, local authorities, regulators. There's a whole list in that section. So that's the definition of relevant employer. Let's move on to how do I define the 250 relevant employees for these purposes. There are a couple of quite important distinctions and definitions around employees contained in the regulations. Funny enough, the definition of employee isn't actually defined in the regulations themselves. There's a little reference to it in the explanatory notes, and by reason of the fact that the regulations themselves have been made under the Equality Act, it is said very clearly that employees for these purposes covers any individual who is working under a contract of employment, a contract of apprenticeship, or a contract personally to do work. So it's that latter category that might cause some question marks for those listening in. If you've got an individual who is under your direction in a position of subordination, they can't substitute, and they are effectively protected as an employee under the Equality Act, they will technically be a relevant employee for these purposes. However, it's also important to keep in mind that in addition to that definition of relevant employee, there are two types of reporting under these provisions, and we'll come on to the different types in a moment. Firstly, you have to report your gender pay difference by hourly pay for all full pay relevant employee, and these are full pay, not full-time, but full pay relevant employee. When it comes to bonus, you have to report on all relevant employees. So I just want to touch on this definition of full pay relevant employee under the regulations, because it does slightly narrow the provisions, and really we are talking here about anybody who is employed on that snapshot date, remember that's the 5th of April of the relevant year you're reporting on, who is working under a contract of employment or a contract personally to do work or an apprenticeship contract, and who is being paid their normal pay, if you like. So the definition says it's an employee who is not being paid at a reduced rate or nil rate as a result of being on leave, and that's quite an important definition. So we'll come back to that a little bit later, but effectively it's really saying, for example, an individual on maternity leave, shared parental leave, who is getting reduced pay, so they don't distort your figures, they are not included in your calculations for the hourly pay rate. That's what we're focusing on. So, Andrew, in terms of the reporting fields, those have also changed under the final regulations.
Yes, they have, Audrey, and I guess probably the first observation to make here is under the final regulations, we're now seeing that everything needs to be reported as a percentage value. So they've tried to keep this really quite neat. What we've done here on the slide, we've highlighted in red those areas that have changed from the draft regulations. for those of you that have already conducted some dry runs. But broadly, similar to the draft regs, they are split into two broad areas. There's going to be information on hourly rate of pay for what's defined as this full pay relevant employees. Okay, and then we have information about bonus pay. So if we can just start with that first group, you're going to need to disclose the percentage difference in mean hourly pay during the relevant pay period. We'll come to that relevant pay period in just a moment. You'll then need to do the same analysis, but this time on median. Interestingly here, this is one that's changed. It was originally a count. Now we're looking at the proportion of male and female employees in each pay quartile. And indeed, they've changed the definition of essentially the naming conventions for those quartiles as well. Information about bonus pay. This is for the relevant bonus period, and it's the percentage difference in mean bonus pay of male and female employees in the 12 months to the 5th of April each year. Okay, you're then doing exactly the same analysis for median. And then finally here, again, we're looking at the proportion of male and female employees who received a bonus in the 12 months prior to the 5th of April snapshot. Okay, so let's just move on to the next slide, and let's just think about some of the timescales here. Let's just start with the hourly rate of pay. Really, everything revolves around this snapshot date of the 5th of April each year. The first one will be 5th of April 2015, and that will be used to determine the data capture for your hourly rate of pay analysis. And you're essentially taking the relevant pay period that encapsulates that 5th of April snapshot date. Okay, so for most of us that's likely to be monthly, but there may be some exceptions where it's weekly or some other period of time. Then we have bonus pay. Moving to the next slide. You'll see these just come up here. Okay, so the bonus pay period, here you are taking the full value of all bonus awards. Audrey will go into the definition of this in just a moment, for all relevant employees. And you are taking a time period here of 12 months prior to the snapshot. Okay, so in essence, you will be going back historically back to the 6th of April this year to capture that data.
Andrew, can I just mention that a few people are asking whether the slides will be shared afterwards?
Yeah, absolutely. Yeah. So we mentioned earlier the call is being recorded, so we'll be sharing both a link to this recording and we'll also be sharing the slide deck as well. Okay, so they're the two components. We're going to dive into some detail in just a moment, but let's look at the first reporting deadline. So in essence, from the snapshot date on the 5th of April, you have got 1 year to publish, to disclose your statistics, and also it gives you time as well to think about the development of your narrative. So just move to the next slide. Okay, next one. Okay, good. So it's a 12-month period. I guess what we would say is there's still plenty of time to do a good job on this, but based on the new final regs, there is a lot to do here, and some of it is quite complicated, particularly when we start looking at the individual components of pay and the breakout. So Audrey, if I can hand over to you and you can give us a bit more detail on this definition of ordinary pay and bonus pay.
Yeah, thank you, Andrew. So let's just remind ourselves, the ordinary pay definition is important because this is what you have to total up in order to get to the hourly rate. And as some of you are already anticipating from the questions we're getting, you need to understand what's in ordinary pay, what's your hourly pay and normal working hours in order to get to the hourly rate. So let's deal with ordinary pay first. Obviously, it includes base pay. It does include shift premium and those types of additional elements of base pay. Because the view is that that is the reward for normal working, and if you normally work on shifts or rosters, then you get your shift payments as part of your normal working. It does not include overtime, and so that's the variation in pay that doesn't count as ordinary pay. A number of different allowances have to be included, and basically what the provisions are saying is that you don't include expenses where you've got payment to reimburse expenditure, but all other types of allowances do count as ordinary pay. And we've given some examples here. The regulations contain what's called a non-exclusive list. So additional payments, first aid payments, for example, acting up payments that are linked to the duties of the employee, places of work, location, an overnight allowance, which is not an expensive payment of my hotel, but actually an overnight allowance would be counted. Payments that are for to enable me to make purchases, to buy kits, or to contribute to, let's say, a car allowance, again, that is included in ordinary pay, as would be retention or recruitment allowances. That is very explicit in the provisions. If you've got an individual who is a full pay employee, of course they're therefore being paid their annual leave, their parental leave at full pay, sick leave at full pay, then that is also counted. And you can see the list of exclusions at the bottom. I've already said overtime payment isn't included, doesn't count. Payments in connection with redundancies and terminations. Payment in lieu of holiday, i.e. unused holiday, is excluded. And benefits in kind. Now, the term it uses in the regulations is anything that is provided otherwise than in money doesn't get included in this payment. But it's also important, of course, for capturing the ordinary pay within the relevant pay period, as Andrew has explained. It must be the pay that's referable to that relevant pay period. So, for example, if you underpaid me in March and then you come to do the calculations for the pay period that straddles the April payment, you top up my pay to account for the underpayment in March. That isn't referable as a payment that's owed in the relevant pay period. So you don't count that top-up element because it doesn't relate to April and my normal working in April. It's actually something that is catching up from my March working. So hopefully that's clear and quite distinct from the next definition, which is around bonus pay. Now, bear in mind, we'll come to some calculations in a moment. Bonus pay counts for two purposes. It may have to be counted in your hourly pay calculations if you happen to have paid a bonus in the relevant pay period. And in that case, what the regulations talk about is prorating the bonus, and there's quite a lot of mathematical formula set out in the provisions themselves. But in addition to the hourly pay figures, you will also have to report on the mean and median bonus gap for men and women within each legal entity, and that covers bonus paid in the 12 months to the 5th of April. For the purposes of the bonus, you have to count all relevant employees. It doesn't matter whether they're full pay or not. So individuals, for example, if I am on maternity leave during April, I may not be a full pay relevant employee for the hourly pay figures. And that's because my maternity pay may have dropped to SMP rates, or it may have dropped to nil after 39 weeks. So I'm not on full pay, and I'm on leave, and therefore you don't count me for the hourly rate figures. But you do count me for the purposes of any bonus I receive during the previous 12 months and in the bonus figures. Now, you should, if you've got individuals off on maternity leave, you should be prorating your bonus. If you're not, then you definitely need to come and speak to Jane or I about that, because that would be potentially pregnancy and maternity discrimination. But those individuals count for the bonus pay calculation. And what we're talking about in terms of bonus pay, as you can see, is all incentive-related payments, pay for performance, vouchers, profit sharing, productivity bonuses, commission payments, and the one that you'll see we've expanded a little bit there, all payments for share options, securities, etc., if and when they become a taxable payment. So the idea behind that is keep it simple. If you're putting a deferred option like that to a tax charge through payroll, then you have to report it for these pay regulation purposes. So let's just move on to the hourly pay calculation, and just by way of a reminder, what you're having to do is work out the difference in the mean hourly pay rate, the difference in the median hourly pay rate between men and women, and then you also will need your hourly pay rates in order to put them into the pay quartiles that need to be reported on as well. And hourly rate, as I've just described, counts ordinary pay plus the bonus pay for full pay relevant employees. So to try and illustrate this, there is a very detailed six-step process which Andrew is going to take you through, because he's the maths genius and I'm not. So Andrew, take us through the stages of the calculation.
Thank you, Audrey. So, yeah, there was a lot of detail here, and actually this simply reflects what's presented by way of the regulations. So let's just bear in mind, calculating hourly pay, this is to determine your main gender pay gap statistics. So for the mean and the median percentage difference, and also determining which individuals fall into each pay quartile. And broadly, these 6 steps can be defined as follows. Step 1 is really about collecting the data. Step 2 is about adjusting your ordinary pay. Step 3 is about adjusting your bonus pay. Step 4 is about consolidating both your ordinary pay and your bonus pay together. And then step 5 is putting it into a weekly amount, moving to the final step where you put it into an hourly amount. So step 1, you're identifying all amounts of ordinary and bonus pay during the relevant pay period. Step 2, you're excluding any ordinary pay that would normally be paid in a different pay period. So the example we used earlier, this may be where there was an overpayment. Where bonus pay is paid in respect of a period which is not the same length as the relevant period, then essentially we're having to prorata it based on that period in order to provide something that's broadly equivalent to a monthly amount. Step 4, we're looking to add together the 2 amounts from step 1 and 3, step 2 and 3, sorry, in terms of the ordinary and the bonus pay. And then finally, step 5, we're multiplying it by this appropriate multiplier, which we'll look at in just a moment, essentially getting to weekly pay. And then finally, everything then comes down to the working hours of the employee. So again, this really kind of levels the playing field in terms of part-time versus full-time workers. Okay, so let's just take a very quick look at an example here. We've used an employee paid in April, ordinary pay 1,100, an annual bonus of 1,200, and let's say they're contracted to work 37.5 hours a week. Well, the first thing we need to do in step 2 is to adjust the ordinary pay. So we look at it and we say, well, this individual was overpaid by £100, so we deduct that from their monthly earnings. Step 3, they were paid a bonus in the snapshot date, so that needs to be included in your calculations. But this was a bonus that was paid over a performance period of 12 months, say the 2016 fiscal year. So we're taking the value, we're dividing it by 365.25 days, very specific, but defined in the regulations, and then we're multiplying it by the number of days, 30.44, as again defined in the regulations, and we end up with a result of £100. We then add the 2 together for ordinary and bonus pay to come up with a final sum for this individual of 1,100. You're then essentially defining a multiplier, which is essentially allowing you to get to an appropriate, consistent rate of weekly pay, in this case £252, and then finally we're dividing that by the weekly working hours of the individual at £6.75. So pretty straightforward stuff on the face of it, but actually when we start to get into the detail, actually we see it can actually be far more complicated than the summary suggests. So, Audrey, working hours, tell us a bit around what the regulations are telling us on that, where it might differ.
Absolutely. So you'll see in this example, Andrew's just taken you through, there's a reference here to dividing by the 37.5 weekly working hours. It does beg the question, of course, once I've done all of this totting up, what am I dividing by? Because what is an employee's normal working hours in a week? It's obviously really important because it's what you need to work out in order to calculate the hourly rate. And it's set out in some detail in Regulation 7. Some of this will be familiar to those of you who have had to look at calculating holiday pay, for example, but it is important to bear in mind that Regulation 7 is an all-encompassing provision and a definition and approach that applies to these gender pay calculations. So, important to bear in mind also that the normal working hours or the working pattern that you have within an organisation, it might differ by reference to employees or employee groups, it might differ by division. But in essence, what the regulations say is, where you've got normal working hours, the standard hours that you work under the contract, that's the calculation that you use. Keep in mind, we're not worried or concerned about overtime or overtime pay here, so that's irrelevant when you're looking at what's my normal working hours under the contract. However, you may have employees working no normal working hours, and that perhaps is because they're working on shift systems, on a roster, they may be working flexibly, might even be working an annual hours contract. So those types of variable working hours, what you do is take what I've described as a look-back approach. And Regulation 7 says where you don't have normal working hours and where they are variable, then you use the 12-week look-back period. You take the average weekly hours over the last 12 weeks in order to get to that hourly figure. However, they also recognise that there may be circumstances where perhaps there are insufficient records, maybe I'm a new joiner and I've only been with you for 6 weeks, not 12 weeks, or just for some other reason, it's not reasonably practicable to do that calculation. In which case there's a catch-all that says it would be acceptable, provided you've made that type of assessment, to use representative hours. Keep in mind also, just a reminder, where you've got a 12-week period that you're looking back to, if in any of that 12-week window there were no hours worked by me, let's say I was absent or from work, then you go back a further week so that you get an established and reliable pattern from the records that you are looking at. So that's how you calculate the normal weekly hours. Andrew's just going to help us again with a quick 6-second maths lesson around mean and median, and then we'll take a look at what figures might actually look like.
Yeah, great. Thanks, Audrey. So, we're just going to use a data set here to walk you through examples of all of the statistics that need to be published today. Now, the steps 1 to 6 that we looked at earlier to define the hourly rate of pay, that's what we're going to focus on here with this table. So this table essentially assumes you've calculated the hourly rate of pay following those 6 steps, and you've compiled your data set accordingly. We have had a few questions just from people wanting clarification on whether bonus is included in these numbers. It is included if bonus is paid in the relevant period in that snapshot month around April, okay? So otherwise you'd be excluding it, but the critical part is that bonus is prorated based on the period to which it refers to. So on this table, here we've got a selection of 12 individuals. We split them out into male and female. For those of you that aren't familiar with statistics, a bit of a GCSE maths lesson, we've got median highlighted and circled here. This is essentially the midpoint of your sample. Okay, so in this case it would be £9.25 for females, £16.67 for men. The mean, better known as the arithmetic mean, calculated by dividing the sum of the values by the number of observations, and typically that data tends to be more skewed by outliers, and when we're looking at compensation data, typically tends to be skewed upwards. So let's just take those numbers and start walking through the steps. So the first one is calculating the difference in the mean hourly rate of pay. So this is essentially the average pay gap for your organisation. You are taking in this example here, A is the mean rate of hourly pay paid during the relevant pay period to male, and importantly here, the full pay relevant employees, and you're subtracting the mean rate of hourly paid to female full pay relevant employees, and you're dividing it by the same value for men. Okay, so you're working out the percentage pay gap as a percentage of male pay. And in this case here, we're coming up with an example of 45.92%. Okay. You are then taking the numbers we just looked at, we're performing exactly the same analysis, but we're replacing these numbers now with the median numbers. So we won't dwell on this one, but typically the numbers tend to come out slightly lower. Okay, so bonus. Let's just remind ourselves, bonus, we are looking at the full 12-month period, and we are not just looking at the full pay relevant employees, we're looking at all employees. Okay, so this one we will be looking at annual values, and it will include data for part-time individuals that may have been on leave for a certain period of time. Again, we need the mean and the median. The median has actually been added into the analysis following the final regulations. In this case here, we have an example of 11.1% for median and 15.24% for the mean. Okay. Okay, and moving on to the next slide, please. Okay, so the next calculation, we're looking at the proportion of male and female employees who received bonus pay. Crucially, this is not about individuals who are eligible for a bonus payment. It is specifically focusing on receivers. Okay, and interestingly, the calculation here is as a proportion of their own demographic. So we're looking at the percentage of males that received the bonus as a percentage of all male relevant employees. Okay, so it's that 12-month period. And in this case, we have an example here of 75%, and you would essentially repeat exactly the same process for female staff. Okay, so then finally, when we look at the proportion of male and female employees according to quartile pay bands, we're taking those original values that we shared with you, you're arraying them top to bottom, you are dividing them into equal quartiles according to population, and you are determining the proportion of male and females in each quartile band. Okay, so the definitions have now changed. We have lower, lower middle, upper middle, and upper. And I guess probably not a kind of trend here. It's just an example, but certainly one that will kind of theme. You'll tend to certainly see more male individuals towards the top end of the organisation and more females dominating the bottom two quartiles. Final slide on this. So this is essentially just providing a summary of all of the statistics we've just looked at. This is essentially what you're going to need to report as a mandatory requirement come April 2018. Of course, there's plenty of additional supplemental information and narrative that we would encourage everyone to consider. But for the purposes of what is required, these are the statistics. Audrey, if I can hand over to you and you can just talk a bit more about that publication and who needs to sign it off.
Yes, thank you, Andrew. So in terms of the signing statement, it is really important that some of the issues, and we're getting lots of questions around prorating bonuses and what sort of payments you include, it's really important that you do the calculations and produce statistics that are in compliance with the regulations and are accurate, because you're going to be asking someone very senior within the organisation to actually sign to that effect before they are published. Just before we move on to who's that signatory, it'd be worth just picking up a couple of the questions. Yes, you are required to report by legal entity. You can voluntarily report at group level, but you have to actually, under the regulations, drill down to legal entity. There's nothing to stop you going beyond and above what's required. There's been a question about leavers and which employees am I counting. Anyone that isn't on your payroll and isn't employed on the 5th of April, the snapshot date, isn't counted in these figures at all. So it has to be relevant employees, full pay relevant employees on the 5th of April snapshot date. And part-timers seem to be causing some concerns. I've already said they count as one employee. You don't round up. There's no full-time equivalent concept here. So you calculate their hourly rate by reference to the hours that they normally work, i.e. their part-time hours. And when you pay their bonus, you count their bonus based on what they actually receive. Again, you're not rounding up to a full-time equivalent figure. It's keeping it very straightforward, on the basis that they want the data to be pulled from the payroll system and the payments calculation. So coming on to who's signing off, once you've made these assessments and these judgment calls that clearly the regulations require, what you have to identify, depending on what sort of corporate entity you are, is whether if you're a company, a limited company, then it's a director or equivalent. Partnerships and LLPs, it's a designated member or a general partner. If it's an unincorporated body, then it's the member of the governing body or senior officer. And any other business or organisation that doesn't fall within that list, it's the most senior employee. So there's a whole range of organisations on today's webinar. And I think we've probably got all of those boxes actually covered in terms of who the senior person is that will have to be signing this off. Once it's been signed off and you've seen the data fields that have to be published, the next question, of course, is where do you actually have to locate this information? So there will be two locations. Firstly, on the employer's website. And the information has to be published on the website that's accessible to both employees and the public. And then, because of course from April 2018 this will be an annual obligation, you will have to keep 3 years worth of figures on that website as you continue adding into 2019 and 2020 and beyond. These regulations are going to be reviewed in 5 years' time, so we know at least for the next 5 years, once the first publication date passes, we're going to have that sort of data. There will also be a requirement to upload this onto a government website, which is a bit of a $64 million question at the moment because we don't have details of what that government website looks like, where it's going to be located. It's being built at the moment, and we will have those details by the beginning of April 2017. It will also have to, when you publish it, each entity will have to confirm the name and job title of the person who has signed off for accuracy in terms of the information. So those were the core requirements. It's worth just thinking about how do you get to this position of actually having to ensure you've gathered up the right information, done the right calculations, and identified the right relevant employees and the right figures. There will be a number of stages to this, and what we've set out here is just the key parts, so, you know, advice on the scope of and definitions, looking at the calculations, and you might want to think about obviously taking legal advice and doing some of those calculations under legal privilege so that you can retain confidentiality around it, but you can then have an audit trail in place, particularly when you're going to your senior person and asking for that signature and sign-off. And we've just set out below some of the particular occasions and things that you might want to keep in mind as potential risks that might heighten your requirement to take very special care and think about doing this under legal privilege. It's really about starting to think ahead now as to what may be required.
So, thank you very much, Andrew and Audrey, for explaining the regulations so clearly. I'm sure it was a great help to everyone. And now it's time for our poll. As you can see, we want to know what stage you're all at. Do you feel very prepared, know what you're doing? Do you feel somewhat prepared, or at least aware of what you should be doing, even if you haven't started doing it yet? Or are you possibly totally clueless? What regulations? That is until Andrew and Audrey explained everything to you just now. Please select the appropriate button on screen and let us know where you are on this spectrum. We'll let you know the results in a moment. But whilst you're polling, we just thought we'd share a few thoughts with you about what we think you should be looking to do in 2017. And by the way, you do have a reasonable amount of time in which to properly prepare and plan for this, because the first report's not actually due until April 2018. And you can see that we're thinking that in a typical organisation, you might set up a project team, including various key departments, HR, reward, legal. In particular, you've got to decide whether or not to carry out the initial work under privilege, IT, comms, PR, keep the executive team in the loop, and then you have to decide what legal entities you need to report on, commence the data capture, decide which employees are in scope, how to do the calculations about pay and bonus, and then start analysing the data and producing your mandatory statistics, possibly under privilege at this point. We're recommending a document audit trail, including legal opinions on the interpretations you are adopting to show a bona fide compliance with the regulations, or at least the understanding you have of those regulations. And then at the end of the project, we are expecting you to assess the outcomes, identify underlying root causes of gender pay gaps, look at how you're going to present the data and what narrative you're going to be putting on your website, considering your position vis-a-vis others in the market. Andrew can help with benchmarking, and perhaps formulating an action plan for how you intend to close the gap. So those are our thoughts on a possible set of steps for next year. And meanwhile, we're having a look at the results of the poll. And no surprises here. A number of you are well ahead and are really on top of all the detail. The majority are in the middle, feeling somewhat prepared, but actually in need of a bit of help and needing to get to grips with some of the details. And there's a significant minority who are nowhere on this as of yet, and hopefully we've helped all of you today, wherever you are. So that's it in terms of the main presentation, and time for just a few questions from Audrey and Andrew. They have actually been pouring in while we've been on air, as it were, and I've only got time for a couple. So perhaps just a point of clarification, when bonuses are paid in the relevant pay period, should they be shown twice, once as bonus and once as part of hourly pay? Does hourly pay exclude bonuses?
Okay, so yes, if bonus has been paid in the relevant pay period on which the snapshot date falls, then yes, it would be presented twice, once in the hourly rate calculations and once in the bonus pay calculations. But crucially, the values that you're including in the hourly rate calculations, those values are prorated. Okay, so if that bonus was a 12-month annual incentive, you'll be reducing that down to a monthly value.
There have been lots and lots of questions about working hours and the calculation of these. No time to deal with all the detail. But I don't know whether you can just give everybody a steer on this, where employees have variable shifts. Do you look at the working hours in the preceding 12 weeks or just the contractual hours? Or is there no easy answer to that one? Does it depend on the actual contractual situation?
It does depend on what's happening in practice. You would hope that if I'm contracted to work shifts, that my contract actually reflects that. So it should be the contracted hours. But in reality, if I am required to work a working a particular working pattern, regardless of what the contract might say, if effectively the contract has been varied, then it would be the changed pattern. This really is focusing on what is happening in practice ultimately and what am I obliged to work under the contract.
Yes, and there's a few questions coming in about the reporting entities and whether if you're reporting for companies that have 250 employees in the group, do you have to also do a group report or is it just per legal entity?
It's strictly under these provisions just per legal entity. Having said that, I know Andrew and I are talking to a number of organisations where, because of their brand and because that's how they normally report at group level, they are going to go beyond what these regulations require and put in some group statistics and information as well.
Yeah, absolutely. That supplemental narrative and analysis is really key for many organisations, and yeah, one of those views might be on a group basis. Other organisations are perhaps looking to analyse the data by key functions within the business, central functions versus fee earners, for example, or perhaps doing some analysis by grade. So there's lots of different ways that you can slice this information and actually perhaps provide a slightly more compelling story than what the mandatory statistics would suggest.
Lots of stuff coming in about share scheme benefits. When do you value them? Is this when awarded or at the vesting date?
There's been a lot of toing and froing whilst these regulations have been formulated, because the first draft back in March was very confusing. Where we have ended up is to say very clearly you only count share options once they vest and only if it triggers a PAYE charge that goes through payroll in the relevant pay period, i.e. in the pay period that is that 5th of April snapshot.
Quite a few questions coming in about bonuses and one-off bonuses such as long-term incentives, recruitment bonuses, buyouts, and those sorts of questions coming in. I think this is another tricky area.
Yeah, I mean, it is a complex area, and some of these are actually, you know, when we've looked at the final regulations, we're now seeing areas such as sign-on and retention that may not have a very specific performance period associated with them are indeed actually being included under allowances under ordinary pay. So interesting stuff as we get into more detail. Yeah, Audrey?
I think in reality that's why it will be very important for organisations to be very clear. What type of allowances do we pay? What type of bonuses do we pay? Which category do they come in? Do they count for both ordinary pay and bonus? And being very consistent and clear with the support of having looked at what the regulations and the expectations are of being as accurate as possible in how they deal with them.
And then having a really good audit trail as well, I guess.
Absolutely,
well,
yes.
Yeah.
And I think for another day, but lots of questions coming in about who counts as an employee, contractors, maybe the records aren't held by the employer, they're held somewhere else. Problems around agency staff, casual staff, temporary staff, 0 hours contract.
Yes.
A lot of stuff coming in about overseas employees, expats employed in the UK and sent overseas, or vice versa. I think we have run out of time, unfortunately, and we can't really grapple with all of those complexities. So I'd like to thank Audrey and Andrew very, very much for such a wonderful webinar, their expert guidance, and for answering some difficult questions. There will clearly be a huge amount to do in the new year, and if we can help any of you with this, we would be delighted. And we will now be following up. We'll be sending the slides and the recording out to all of you. You have our contact details on screen now, so you know how to get hold of any of us if you need some help. And so finally, just to say thank you very much for listening in today and participating. We wish you all a very good Christmas break. And we look forward to catching up with all of you in the new year. Bye-bye from us.